How's everybody doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to talk about an absolutely crazy story. 40 banks disappeared in China this last week. I mean, it's just it's a crazy story. So let's go in and take a look. So this is an article from MSNBC and basically says China's banking turmoil. 40 banks vanish. I've seen a lot of things in my years in bankings. I've never seen 40 banks just vanish, with Jiangxi leading the collapse. And let's go through this article. I want to take a few minutes with this because this is, and I will say this before I dig into this real quick. I really find it fascinating. The last, I would say, 4 or 5 months, that the biggest stories do not seem to be getting coverage from your bigger financial sources, like where's the Financial Times, where's the Wall Street Journal, where's Reuters, where's CNBC? Why am I just seeing an article with this in like MSNBC or in a bunch of other lower, what I would tier, like kind of lower places on the net? You know what I mean? They're again, it's just something I've noticed and I wanted to point out. But I feel like the biggest stories a lot of times are not getting, the coverage. Like we had the bank in Japan, basically failed and then said it was going to, dump, $63 billion in U.S. government bonds, and that got like no coverage. And then just several other stories. It's just a very interesting thing. But let's get into this. So, and if I can set the stage for this for just a second. So, if everybody's not familiar, China, and I've been saying this for a few years now, China has developed probably the largest real estate bubble in the history of the world. And they have a bigger bubble than the real estate collapse that we suffered in 07 and 08. Theirs is way bigger than that. Way bigger than that. And that's where a lot of where this is stemming from. So they had a giant real estate company there called Evergrande, which basically failed last year, and it had, like, basically they were doing all these developments, and they basically stopped making payments, and then they went back to the government and said, "Yeah, we need a bailout." The government, kind of bailed them out, and then kind of didn't. So this has been an ongoing thing, but now it's starting to hit these banks, and I would tell people that the four largest banks in the world are in China. You have J.P. Morgan, which is the largest bank in the United States here, but China has four banks that are larger than J.P. Morgan. So there's some things to kind of keep in mind as we dig into this article here. So as we get in here, so the Chinese banking sector is facing a serious crisis. In just 1 week, 40 banks disappeared, and the collapse of Jiangxi Bank in China has further deepened the sector's problems. Experts warn that the situation could have severe consequences for the global economy. Reports from China indicate the collapse of one of the banks, the portal, if I'm saying this right, renminbao.com, published a report from outside the headquarters of the Jiangxi Bank, which concerned clients stormed over bankruptcy rumors. The bank had previously informed that its profits could drop by 30% due to customers' loan repayment issues. Now, on a side note, I did see a video on X this week of a ton of Chinese people storming a bank in China, but I wasn't sure. There wasn't a lot of context to it, and I wasn't sure exactly, but now I think it was this. I think it was Jiangxi Bank. I think that's the video that I saw this week when I was looking at this. But then it goes down here. Basically, China's growing problems with banks. The Economist described the situation in the Chinese banking market. It was noted that approximately 3,800 banking institutions were threatened in China. Let me say that again. 3,800 banking institutions were threatened in China. Their total assets make up about $4.5 trillion, representing 13% of the country's banking system. The magazine emphasizes that these banks have long been poorly managed and have accumulated vast amount of bad loans. Interesting. We haven't heard this before. Why haven't we heard this before? Now, all of a sudden, it's becomingly known that the 3,800 banks in China are poorly managed. The report states that many of them lent money to developers and local governments, exposing themselves to the impact of the real estate market crisis. There we go. And there's the real estate bubble. The authors note that in recent years, some banks revealed that 40% of their portfolios consist of non-performing loans. So in banking parlance, that means that you have basically a loan that's not paying anymore. Disappearing banks and attempts to rescue the sector. So the rare disclosure, and this is one of the problems with China, is that they don't share information. They're not forthcoming, and they're certainly not open with us. The rare disclosure of a bank's problems may underscore the seriousness of the situation. A similar mechanism was observed with developer companies. Little was heard about the giants' problems until the authorities eventually confirmed the issue affecting the entire industry. That is crazy. The Economist points out that China's primary strategy in dealing with small, weak banks is to absorb them. Of the 40 institutions that have recently disappeared in this way, 36 were located in Liaoning province and were taken over by another lender named Liaoning, if I'm saying that right, Liaoning Royal Commercial Bank. And then it goes on to say, this kind of cryptocurrency market thing. The author also highlights, hang on, let's go back to this. Cryptocurrency market analyst Sigma G also examined the situation in China's banking sector. He points out that the leading cause of the problems is the deep recession in China's real estate sector. Over-indebted developers and local governments fail to repay loans, leading to financial instability. Property prices have plummeted and construction projects have been halted, further burdening the economic system. The author also highlights the issue of hidden bad debts. Banks have used asset management companies, AMCs, to offload toxic loans. That's kind of interesting. Kind of like what you see the big banks in this country have been doing for the last 6 months, offloading their bad loans to alternative lenders, to private equity and hedge funds. However, a new banking regulator, the National Financial Regulatory Administration, has begun cracking down on these practices by imposing fines and increasing oversight. So, and then it goes into the outlook for the Chinese economy, and then it says the clock is ticking, problems may deepen. So the author predicts that the Chinese economy is entering a prolonged and feigned growth phase. Years of credit-fueled growth have finally run its course, and the result will be lower growth for China and the negative impact on the global economy. Slower growth of the Chinese economy will in turn exacerbate their banking problems too. The expert forecasts that slower growth in China's economy will exacerbate banking problems. He believes the situation will most likely end with massive liquidity injections, economic stimulation, and investors fleeing toward hard assets. Being, in China, that means basically gold. S&P experts quoted by The Economist estimate that repairing China's banking system could take up to a decade. However, official data may still not reflect the scale of the problem. The 2023 report of the People's Bank of China shows that 3,655 banks whose assets accounted for 98.2% of all assets deposited in Chinese banks are safe. The Chinese bank also confirmed that the risk concerns only a portion of small and medium-sized financial institutions operating in rural areas. For now. According to the document, large banks received good ratings indicating the stability of the economic system. And then it concludes here by saying the clock is ticking, problems may deepen. Why do small banks have such big problems? Many Chinese cities and even entire regions are drowning in debt. The liabilities were so high that local government representatives sent envoys to Beijing in the spring. They are negotiating terms for repaying billions in loans. Unpaid debts are increasingly weighing on regional economies, threatening national economic growth. The debts that Chinese companies are drowning in are primarily the consequences of the real estate crisis and the effects of the pandemic. Over the past decade, many construction projects were financed with debt. Infrastructure development was supposed to drive local growth, but following the crisis caused by the COVID-19 pandemic, local governments lost the ability to continue investing. Meanwhile, they still have to repay old debts. Goldman Sachs estimates the debts of most important Chinese regions at 11 billion. Some of these liabilities are public bonds. For example, defaulting on these could hit the entire economy. So this is a massive problem in China. China's entire economy could collapse because of this. And if it collapses, you're talking about the second largest economy in the world, and that will have massive ripple effects on the global economy. It will have massive effects on us. It will have massive effects on Europe. What does the U.S. do? I mean, our debt has exploded. I mean, if they look to us for some kind of a bailout, or if they look to the rest of the global players, they go to the World Bank, they go to the IMF, they go to the World Bank, they go to the European Union, they come to us here in the United States, and they basically say, "Hey guys, we need a bailout. Can you help us out?" I mean, the entire Western world is basically drowning in debt right now. I mean, I don't think that there would be a way for us to come to their aid or to bail them out, and I don't think many people would go for that, especially not with the political climate of what's going on with China. China playing their games with Taiwan. All the unanswered questions about the COVID pandemic. Did they release a bioweapon on us? Hello, big question there. There is a lot of political turmoil there right now. And, if they did come back, if their economy does collapse, which again, my little opinion, I do think their economy is going to collapse. I think this is the first stage. I think you're going to see now thousands of banks around China, probably like they said, the 3,800 in this article that come into question. You're going to see thousands of banks collapse. It will go like a domino effect. It will go up, and they will face a reckoning just like we did back in 07 and 08. And then to me, that creates a very dangerous situation, especially for Xi Jinping, because, what does this man do right here? If he's facing an economic collapse, does he then start a war? Does he invade, take Taiwan, start a war with us, with the United States? Because, he needs to change the narrative, and he needs to give the people something else to focus on other than the fact that their economy is crumbling around them. So I think this is a crazy, crazy story. I can't believe that this did not get more coverage in the mainstream media this week. I cannot believe that this wasn't a bigger thing. Like I said, I've been around for a few decades now in the banking business. I've never heard of 40 banks just disappearing overnight. That's code word for they failed, and they had to be absorbed. And obviously, they had a big run on this Jiangxi bank in China, which was obviously not a good look. And of course, standard protocols to come out and be like, nothing's happening here, nothing to see here. I love it. It's always fun. If anybody, I'm dating myself a little bit, but if anybody remembers The Naked Gun with Leslie Nielsen, one of the great scenes, which has become people probably know the meme, where he's standing in front of the building that's exploding, and he's like, nothing to see here, everything's fine. Disperse, nothing to see here. It's like that's basically what's going on in China right now. The entire banking system is about to implode on fire, and this guy's out in front going, nothing to see here, everything's fine, it's cool, it's all good. But anyway, okay, so definitely something we're going to keep an eye on, and if there are updates here with this, I will definitely bring everybody that news and let them know what's happening there. But if you like this episode, please make sure to like, share, and subscribe. That always helps the channel. Please make sure to remember we are on YouTube, Rumble, and all major podcast platforms. Please leave your comments down below. I always love the comments from listeners. And please make sure to check out some of the other videos that have been posted up over the last couple weeks and this weekend. And I will be back with everybody again real soon. Thanks a lot.